What's going on, traders? It's Lucas here from the Commitment of Traders Club. Thank you for joining me on Commitment FX today. I want to show you a video of the upcoming weekly opportunities which I have published over on the Commitment of Traders Club. I will leave a link down below if you're not a member already. But a quick video on the upcoming market this week, and also some tips and tricks in how you can go about reading the chart easier and understand market direction much more clearer. So without further ado, let's get straight into it, and I'll see you guys over on the charts. Let's go. So traders, the first one I have lined up for you is EURUSD. Now, what a fantastic week the euro has had. It blew past everyone's expectations of the pair. Now, there are some interesting points of view which we need to go about here. And the first one is we've had this nice bullish momentum to the upside. To start off with market analysis, you always want to draw on your areas of interest. So straight off the bat, we have an area here where there's been multiple wick rejections, and closing on the daily on Friday, we've also had a nice wick rejection from this area. Now, we also want to draw on our Fibonacci levels. Published over on my weekly outlook, I break down this pair in great detail. Now, back over onto the chart, if we get our Fibonacci tool and draw it from the daily, from the high to the low, we can now see that some fib levels are drawn onto our chart. And one that I will be most interested in looking at is the 0.618 zone, an area where the market respects it quite regularly if you backtest it using this trading tool, and an area where banks and institutions like to trade from. Now, the market has been wavy to say the least, but this market is certainly lined up to be a selling opportunity. Now, how do I know that? Because I trade in line with the banks. If we go and have a look on the Commitment of Traders data, and we go on the euro, what the data is telling us is from the 1st of June to now, the institutions have closed out 100k net positions to the long side in favour of short. There's been a 5 or 6 week long period where they continuously opened short positions and closed long positions. More recently, perhaps with the other fundamental news that's been released last week, they have opened some further long positions, but again, net positions have been dropping, with the previous week them closing out some long positions again the week before and opening up some shorts. So the market is lined up for a selling opportunity. The banks are building their position for the market to go to the downside. So for me, I'll be hoping to see that this will happen at the 0.618 zone. But it is worth noting that we have this area of interest here, which market is already finding resistance at, in which there could be a trading possibility that the market will then push to the downside from here. Now, to enter the trade, we need part of our confluences and our market entries to be satisfied before we hit that execute button. Join us in the link below and you'll get access to a trading plan that we have over there. So an interesting pair this week. In my opinion, it is lined up for a sell opportunity at some point. We know that from the data, but we just don't know when. So that's when our smartness comes in, our intelligence comes in, and we have to look at the market and analyze where is that reversal going to be. You can see that this has been trending to the downside with a recent strong push to the upside, has created a W formation, so we are likely going to see it pull back at least to the peak of this level. It may then continue to the upside, but again, overall, it is a bearish setup. So for me, I'll be waiting for the market to hit the 618 and again, publish that over on the Commitment of Traders Club. So the next pair we'll get into is the EURGBP. Let's have a look at this one. Okay, so over here on the EURGBP, this has been a fantastically trending downwards pair. Quite clearly there has been a descending flag which has formed, as we can see on the market here. Again, we want to get it tapped as multiple times as possible, so some will fall out of this pattern, but again, that is just liquidity being formed. Again, you can see here, huge push to the upside. Most likely retail traders stopped out, banks stepped in, and they take their money. But what we can see here is the market has broken above and is coming back for that juicy retest. what we want to see is further confirmation of this retest. So for it to form a level, find support at this area, and then continue to the upside before we get in on this pair. Interesting one nonetheless. It has broken structure. It has found some opportunity to find support here, which previously has been resistance at some point up here. But again, a nice pair to keep an eye on. So moving over to the next pair, we published USD Turkish Lira. Okay, so looking at the chart here, very clear and simple price action happening as we see it. The area 8.330,000, a psychological number that retail traders and institutions like to trade from. Whole numbers, we all like whole numbers. They look great, they sound great, and they trade well. There's been previous support from this area once, twice, and now we're finding a third tap of this area. Now what that tells us is that price respects it and moves quite violently in the upwards direction from this area. You can see that by these huge wicks here, and again a wick rejection here. And price was in a nice strong downtrend, but coming back to this area, it is finding that the market is fizzling out and that the sellers are losing their momentum that they once had. Close on the Friday, we had this nice big push on the upside on Friday day. We can then expect the market to continue in this direction based on the strong candle, the engulfing bullish candle that the chart has printed here. So again, a great opportunity for a buy here. Let's have a look at the next pair. Okay, so on the GBPUSD, another fantastic opportunity in the making on this pair. Now, for some of you, you'll find it looks very choppy. There would have been a nice entry down here. This previous level caused this nice push to the upside. But before I get into analysing this chart, you have to find out what side the banks are on in this market. In doing so, we go over to the Commitment of Traders reports. Again, I'll leave a link down there. If you've not joined yet, please do join. You get access to valuable data that's shown over time, which you will not find elsewhere. GBP, we can see that the institutions have gone from having plus 32k positions in favour of the bullish, so an uptrend. Then they've been closing and closing their positions quite regularly, again over 4 or 5 weeks, to now having minus 14 or nearly minus 15,000 positions to the short side. Now what this tells us, especially the past 3 weeks, they've been closing their longs and opening some number of short positions, is that they are again building up their positions for the market to go to the downside. As a recap for those of you who are newer to this game, institutions can't execute trades as quickly as we can. We can click buy and we can click sell, and that enters us into the market immediately. But you have to imagine these institutions and these, financial traders, these big banks who move client money, they have to build their positions up over a long period of time because they do not have the liquidity to enable them to execute the market immediately. There's just not that money floating about. Remember, if I buy GBPUSD, there has to be someone who's selling GBPUSD. That's how we both come into the market. One of us will win, one of us will lose. Now, when it comes to the institutions, they have to get lots of losers into the market, so they make the market go in one direction. It stops them out because then dramatically comes in their direction. That's how they get that liquidity to build their position sizes. Now, when it goes in their direction, they then increase their positions according to how much money they have to move. So we can clearly see here that even from the 13th of July, they've been closing out long positions and opening up short positions, especially here, to cause the net positions currently to sit at almost minus 15,000 when it was plus 32. So you can clearly see a change in the market movement and the banks building up their positions to the short side. Now translate that over onto the chart. What we can expect then is at some point this market will push back to the downside. What I like to use is the Fibonacci tool, and we take it from the high to the low, and on comes our magic number. Our magic number can clearly see that it's been tested once, twice, again 3, 4, 5 times if we look left as well, and it is a whole number, the 140,000, that psychological number I mentioned earlier. So what we can expect then is some bulls to step into the market. You've got the retail traders who've got this huge momentum, so we will expect this to continue to the upside and then find some resistance at the 0.618 zone for the market to plummet down. So if you are on the right side of the market here, You may be taking buying opportunities, and rightly so. There is this huge momentum currently. And over on the COT data, you can clearly see they've closed out long and short positions, which is a consolidation. In consolidating, this then allows retail traders to take control of the market and push it to the upside if the market goes to the upside, which it looks like it will. Once price hits the 0.618 zone, which may take a week, we'll hopefully have another report of COT data in which we expect to see the banks and institutions adding short positions. This will then cause resistance at this area and then for the market to push to the downside. A fantastic pair to put on your watch list. Let's have a look at the next one. You join me on the Aussie dollar US dollar chart. Again, a crazy pair last week. It blew past expectations. I was hoping for some resistance at this level here, but unfortunately it pushed not in my direction. The market is not ready to move to the downside. Now, if we look at the weekly chart, we can clearly see we are in a downtrend. We found a nice double top, and we've had this nice bearish momentum to the downside. But in the past 2 weeks, the bulls have stepped in. Now, that's not to say that this market is reversing. We need to look at it on a COT basis. If we take our Fibonacci tool from the most recent high to the low, we can see that the magic number, the 0.618 fib level, has fallen in line with previous price action. It's crazy, right? You've got 1, 2, 3, 4, 5, 6, 7, 8 taps of support and 1, 2 tap of resistance. And that shows us that this level plays a key part. And funnily enough, it is also a psychological number. It being that psychological number, there's good chance that price is going to come back and respect this area. Now, looking at it from the daily perspective, buyers are still heavily in the market, although there is some overextension. So what we might like to see here, we've had this nice bullish push to the upside. We will expect now the market to retrace, retail traders closing out their trade if they've had a good profit run. The market will retrace, find support at the next level. Again, think like a retail trader. They'll find resistance at this level, find support at this level, which was previous resistance. And then the market will no doubt push to the upside. Now at this point, I anticipate the market to melt back down to the downside for one simple fact. It's what the banks are doing. Let's head over to the COT data and head over to Australian dollar. Looking at Australian dollar, we can clearly see lots of red. Red, 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 red. From going from the 18th of May, where we were 3k positions net to the bullish side, we are now minus 60k positions to the downside, with the past 7 or 8 weeks constantly opening short positions. You may ask, well, why are they opening long positions? And you'll see that they are very small in comparison to the short positions they've opened, and that is a simple fact because they are hedging. They open long positions, they open short, they hedge their positions. Now, recently they've had equal amount of closures, long and short, and that's going to allow for retail traders to step in the market and for the market to consolidate. So we expect then the retail traders will have control of the market. The banks have kept their positions quite closed in this instance, that it will continue to the upside because of the recent trend. If you're an intraday trader or a scalper, you'll constantly be seeing the market moving upwards in the short term, so you'll be looking for buying opportunities. But if you're a swing trader like me, you zoom out the chart and you can clearly see that this, you could say it is a retracement. It has broken past the recent high. It's a deeper retracement from this leg, say. We're now going to come to the magic number, find resistance, and then the market is going to melt back to the downside. And as you can see, I've set an alert for this area. A good one for your watch list. Check the COT reports. You won't find this data anywhere else where you can see it as a back, in the past level. So do join the club to access for this data and also our analysis. Moving on, we'll head over to the next pair. So the next and final pair I want to discuss is gold. Now, gold is generally a currency pair, or an asset, I should say, that moves to the upside over time. It's a material that is depleting, a natural resource that is depleting. It's the price of which will always increase. But again, like any asset, it has depreciation at some point before it continues. Now, what we've been seeing recently, and again, we're looking here at the weekly, is that it found strong resistance at this previous level, and we've now had this massive impulse to the upside. Going on to the daily chart, there has been previous resistance once, twice, 3 times, and a 4th time here. But last week was a crazy week for the Forex market that we've now finished Friday with this huge bullish engulfing candle to the upside. But if we analyse the chart in more detail, again, Fibonacci tool, if you know me by now, you know I love this tool. From the high to the low, and what we can see is our area of resistance falls in line with our magic number. But we can clearly see on Friday we've closed just above the Fibonacci level. Heading over to the commitment of traders data, we want to know what the banks are doing. So we go on gold. And what we can see over recent weeks is the amount of long positions they have been adding and the amount of short positions they have closed. This is therefore fallen into from the 6th of July having 182k positions to now having 216k positions to the long side. Now you won't find any red on this pair. It is, as I mentioned before, a asset that is always increasing in value. Although, as we know, the market moves in waves, so we are at a dip at the moment. But this chart is telling us that the banks and institutions have been increasing their positions to the long side. Now, there's a good signal there that this is going to break through this Fibonacci level and continue to the upside. As competent traders, we want to wait for that confirmation, the retest of the level for it to continue. I have also drawn on here the potential for it to go to the downside based on previous price action in it finding resistance. Again, we can look to the left. We've had a huge bullish engulfing candle here, followed by this push to the downside. As competent traders, we want to make sure that we take the opportunities carefully and on the retest of the level for such a volatile asset. If this wasn't gold and some of the other pairs I have mentioned today are not as volatile, you can have your entries a bit more aggressively. But in this pair, I always recommend that you play cautiously. Wait for that retest and then enter when it is safe to do so. So traders, thank you for taking the time to watch this video. Please hit that like button. Let's see if we can get 10 likes on this video. Leave a comment below which pair you'll be trading this week and if your analysis falls in line with mine. I'll also be interested to hear if you're a scalper or a swing trader, and we can see what the overall view account is on that. Stay safe in the markets this week. It was a crazy week last week. Keep an eye on the opportunities, stay competent, and traders, be on the right side of the market. If you want to be on the right side of the market and stop losing trades, a link is down below for you. In the meantime, happy trading, stay safe, and we'll see you guys on the next one. Let's go.